Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
Let's move into the Forex Factory counter. I'm actually going to share with you guys the variable back tested symbols. That's the tab I was just on, but let's just go through this. Okay, so just keep in mind that Chairman Powell has really been in front of the camera a lot the last couple of weeks. Guys testifying for the next 3 days. If you're not familiar with what it is, you can always click on it and just read about it. But, you know, I mean, I penned a letter to clients that I posted on my Market Watch site. I'm not going to read it to you guys, but essentially what it does is talks a lot about what went on last week and some of the stuff that I thought was the difference. But Fed Chairman Powell is basically saying that the Fed has a plan, that they're going to work the plan for the next 2 to 3 years. Right. So not signaling any changes in interest rates for that period of time. The problem with that is that, you know, as we're beginning to see the potentials of inflation slide in like a small smoke cloud, or as a small fire, if you will, that unfortunately in California has had a pretty rotten history of turning into a major wildfire over the last few years. So what we're trying to do is stave off any problems in that, or at least begin to understand to what degree the smoke, if any, you know, continues to move in. So I'll always be on the lookout for that. And then we're going to talk a little about bonds and their relation to currencies today. I've talked a little bit about it. I've tried to keep it very, very basic. I do understand we have a lot of new subscribers. There's been a lot of views of this. And, you know, if I lose anybody, just sort of stick with me. I promise you, we'll bring you back around. And, you know, enough osmosis of what I'm preaching every week, right or wrong, it will begin to sink in. You will begin to understand. But do note that there's just a monster amount of information on my Telegram channel. If you guys ever care to go in, you can always go in. We're going to be updating this picture here, by the way. You can always go in and see all the photos, not just of you, but don't forget about the pictures of me. Nobody cares about that. But look at the different stuff I've posted, candlestick charts, right? Different sort of heads ups as to what's going on. I think the Forex is the big one. This will help a lot in understanding the relationships between bonds, interest rates, LIBOR, money supply, whether it be an M1 through an M3 rated money supply. Just focusing on macro. I think this is going to help a lot of people. I've already gotten some pretty positive feedback. It's basically a micro and macroeconomics class all on one sheet of paper. But go through some of this stuff, you know, to really teach you. In addition to the Auvoria Academy, it can really offer a great education from just a real basic standpoint. All right. Yes, thank you. Happy birthday. Looks like we got a lot of people posting that, so I appreciate that. All right, so let's talk about, so we know about Fed chairman. We know, obviously, we've got Germans manufacturing. This has been an issue with any country because some of these spiked a lot during stimulus and then they backed off. And now it'd be interesting to see how this comes out. Do note that both the Bank of England and the Bank of Canada are both speaking this week. And actually, you know what? Let me take, it looks like we have the daylight savings time shift next week. Let me just take a look at the calendar here. All right, so we got 21st Monday, 21st Sunday. Yeah, so essentially these 3 days, Fed, and then the latter 2 days, other Feds. other central bankers speaking. So it could be a pretty treacherous week for all currencies. In this particular case, I probably would take a little bit of a closer look at the trades you're taking, and or if you have the software trading for you, what's being traded. Probably much more so important to go back to the developers calls and see, what's changed. I know Dasan's made some adjustments to some stuff. He's done a lot of back testing, looking to potentially implement the trending function in variable. And I know he's got some more testing essentially to do with that. So just be sort of aware of all that. It looks like there's a time shift next week. And I don't know much about this European time shift. So if anything looks off kilter here as far as the news, you guys could fill me in on. But do note that with a lot of these time adjustments, it's going to be critical that not only you reset your VPS on a full reboot, but if you're running the different software, especially Neo, you look at some of the posts on their site to make sure that the time's adjusted correctly for the software inside in relation to any changes. Okay. I know that can be kind of confusing, but they do a pretty decent walkthrough of how to adjust the times. Can't really ever go wrong by rebooting your VPS on the weekend. Gives it a chance to updates for anything, whether it be software or infrastructure. Do note that Forex VPS, my opinion of these guys has been improving dramatically because they have really put some time and effort into finding some wrinkles, if you will, inside the system that have been ironed out over the last few weeks. So my hat's off to those guys. And, as they continue to scale, as we continue to scale, my hope is that they keep up the high level of wanting to work with us versus head in the sand, which has been unfortunately a common theme in this pandemic. So that's a note next week. And I know the developers, a lot of people ask me, do developers trading? I don't really ever get any communication from Bill and Riley anymore, and Einstein or Alexander. So I assume they're trading, right? I don't know that anybody gives a crap about that anymore, but all really matters is if I don't like what I'm seeing currently and or what potentially could be a dangerous week in terms of volatility, there's nothing wrong with not trading, right? Or switching to Arrow, right? And then just manually trading. Or, turning on mode 1 if you have Neo in your access pass grouping, right? Very, very conservative. It could still squeeze out some performance for you, right? A lot of our corporate money, big chunks of our corporate money is being run on mode 1 of Neo right now. Very conservative. Now, I get it. A lot of people don't necessarily want that super conservative return, but it looks pretty good in comparison to some of the absolute blowouts we've had way back in the beginning of AP, when we had just one piece of software, Martingale's system, trading through a pandemic, which I had told many, many weeks in a row for many that I'm just not trading. Nothing's trading. I'm going to trade in the futures markets, right? I was trading equities a lot back then, but I just turned off the Forex. It's just too bananas for me. So right, wrong, or indifferent on that, there's always, you can always take, what should I say, solace in the fact that keeping your powder dry and your capital intact is an investing position. A lot of people think, well, I got to trade. Most of the people that ruin themselves in trading anything, I don't care if it's options, Forex, whatever, the vast majority of them are trading. The vast majority of them exhibit one of the most destructive personality traits in this, and it's called FOMO. It stands for fear of missing out. I have had clients that I've had to completely reprogram because they exhibit too much of this. And in late stage bull markets or bubbles, 2000 and to 2000 in the first quarter 2000s, when everything started melting down to the top of the market, 2008 before the financial crisis, to basically right now, 3 bubbles, right? The bullishness across all kinds of stuff is just nuts. And actually, one other thing I'm going to show you guys here, I think is worth, before I forget, let me just log into Twitter here. And I posted this, or most of the stuff I do is just retweets. I thought this one was really fantastic. Getting a bit off track here, but I think this is just important for everybody to understand. So in Bitcoin world, this is chart of who owns what. So essentially the top 2.4% of coin addresses own 95% of Bitcoin. Now I'll just throw this one question out. I could be wrong, right? What happens to the price of Bitcoin when the larger chunk starts to sell? So I'll just leave you at that with that thought. All right, so let's go to the charts. S&P moved to the daily. Right near high, a little bit of a pullback. Different story in the NASDAQ. You can see that this is looking kind of head and shouldery right here, sort of a sloppy pattern at best, but two shoulders ahead. And this is the neckline right in here. So we're looking closely to see if possibly tech breaks down, in which case we could see a pretty decent waterfall down to the center point, which is probably somewhere in this 12.5 to 12.3, or I'm sorry, 11.3 to 11.5 area. Let's go to the dollar. If you got any questions, by the way, the Q&A window is open. Feel free to ask away, especially in a lot of these more exotic pairs. So GBP CAD. Okay, so this is the currency. Actually, let me double check one. So with Neo, this was, yeah, okay. When was this? This is the 19th. So yesterday, summary for last week in Neo was a clean week without any stop losses on either mode. Okay. So I think this is important to see because you're looking at this chart. It's actually fairly crazy movement in CAD. But the beauty of Neo is it's only trading that 2-hour window where most of this didn't really show itself, sort of outside of that. So sort of keeping the risk levels low. But total trades were 10. Mode 1 trades 3. Mode 2 trades 7. Remember, mode 2 is a little more aggressive. So relatively stable. This is pretty much the thing they said last week. Then if you go over to a variable, some of what Dasan talked about last week, I'm going to show right now. Changes from last week. AUD NZD set to trending for the experimental account. That's the more aggressive variable account. For the big account, pausing on pairs, pausing all pairs until CAD CHF drawdown is lowered. See that? All right, so that gives us a little bit of an insight into GBP CAD here. Let's start off with the dollar. Still that resistance level right under 92 is holding us. We peaked above it real quick and came right back down over the course of one day, I guess, right? Now we're back under, still holding. I think that we're coiling here. If you guys have never heard that term before, coiling is essentially where any instrument that trades is trading under a certain level and it's sort of building steam and or shorts or putting in positions up, in these zones I'm constantly pointing out with my crosshairs here. They're probably building up some shorts for, I would expect to see a possible burst right into that 92.50 or 92.50 area, right? Now, if we do get that burst, more than likely we're above this resistance point. That makes sense? So we'll probably stay above it. And then there is a chance that we start trending in the dollar up, right? It's against almost every prognosticator's, everything that they've been talking about the last couple of months. While we do ultimately see the dollar lower around the 85 area, I think we've got to go up and barbecue some shorts for a little while. It seems like the unexpected trade, which is typically the trade that becomes expected. So the opposite's going to be the case. If that in fact is you're going to have this decidedly drop below, which is almost perfectly an inverse chart. This is euro US dollar underneath here. And then you notice we're just holding in the same pattern. But I do seem to think that we may burst down, in which case you have a sort of a trend down that'll take place. And then I would seriously expect the bottom of this 61 area, right into this, yeah, like 16 all the way through about, 1 point, about 1.61 should be the bottom of this. I would expect it to auction down to this point if in fact it does break, right? Who knows? It may hold and go higher, right? But just to know that if you're accepting trades that, it's starting to take a lot of long trades as we burst through this, you're going to see the, any kind of martingale system. That's not the time I'd be basically taking longs, right? You don't really want to try and catch a falling knife, because more than likely, if we break this, we're going to auction all the way back down to here at some point, right? And then when you're taking all these longs all the way down, you're in whatever sequence level of longs. It's just tough to pull out of that stuff. So I'd rather be in some sort of trend mode, depending on the software, or just taking shorts as they pull back up against the trend line that'll more than likely form. It'll probably look like this, but just an inverse of this trend up, right? You can almost perfectly draw these lines up and down to be able to see the bottom of that chart here and do all that. So looking at just the absolute bottom. You taking off to a meeting? Oh, really? All right, cool. Multiple meetings going on around here today. What more do I want to say about this? I think that should be good. Let's take a look at GBP USD. Same thing. Now, in all fairness, this one is probably going to stay here and then pop back above this level. I would expect at some point we're going to go back and visit this 42.1 level. That'll be my assumption. Always want to be looking to see how you could potentially be wrong in your movements, and that's dropping down below. All right, so GBP CAD, did I already go through that? Let's take a look at CAD CHF. I know we get a lot of requests for this because this dog has just been in a trend up. Okay, so anybody that's remotely a chartist, right, could see that when we decisively broke, this is a daily chart, okay? When we decisively broke this area, there's no way I'd want to be taking shorts. Because look how quickly we burst up. Now, I arguably you'd be like, well, I could have taken some shorts here. Yeah, you would have made some money on that, but you're far better win rate in any trade that's been positioned in this particular pair over the last, what are we at, 2-3 weeks, right? The win rates are far better on the long side. So this is a great example of this. This is why you don't have to be an expert in understanding candlestick analysis. You could take my half-assed forecasts and still know that you'd be better off not taking shorts on something like this as it just continues to rocket up. So for those that were taking lots of shorts, it should have been a trend up. Now, ideally, we don't really necessarily have all these trend ups perfectly ironed out in all the software, but when they do, you see the break take switch to trend, and until further notice, the software is hopefully taking pullbacks against the bottom trend line. So any type of trend trading that is taught by any trading mentor, and there's a lot of really crappy ones out there, really is just your win rates are always the best when you're taking these bottom trades coming back down against what's arguably a very steep trend line. So it's tough, but just know that generally, which is really all I'm looking for you guys to take from this, is that the win rates are higher on the long side. It's that simple. Now, I have no idea when this will reverse. This is a big area, so you would expect it to stall where it is. We could form an upper balance area, right? And let me double check one other thing that Dasan said. Changes from last week, puzzle pair still. Lord. Yeah, I mean, this CAD drawdown could, yeah, this could drag on for a while, guys. I mean, we spent a long time balancing here and just broke from it. So I really think this is an example of one, if you're not sure when this breaks, just remove the pair right from your trading system, or especially if you're trading arrow using all the statistics that's on a lower time frame than a daily chart in many of these strategies that Nathan uses. But the concept's still the same, just buying the pullbacks, right? And at some point we're going to have two pieces of software that are perfectly ironed out in those areas, and it may be able to trend fantastically and trade the whole thing versus just trading a balance, which is really where Martingale is good here, by the way. This whole period of time, Martingale would have been great because we're bouncing along, right? Nothing too crazy in terms of, but just, taking the outer bands, waiting for it to pull back. Typically currency markets are mean reverting in the longer term. So this may be one of the things where if you're in drawdown this, you may have to hold for a while. I hope I'm wrong and it comes right back down, right? But it doesn't look like that to me, even if you go to a weekly chart. Looks like it wants to test the 76 area. So ultimately, I would think that, if the current economic and flow and order flow and all those are currently continuing the direction they are, this ultimately would be the area. This isn't probably the news you guys want to hear, but just trying to give it to you straight. Euro GBP, I didn't take too much of a look at that. Let's look back on the daily chart. Lots of dojis down here on the daily, if you guys can see this. Maybe we can get a better view. When you have multiple dojis, these are indecision candles. Means that we're holding for now the current pattern. This was your first clue, this hammer reversal, and then some little bigger volume as we came in, that more than likely they were going to defend these lows. But if this breaks, it's probably going to be swift. Then you have to move back to the weekly chart to see. Ultimately, if that in fact is the case and we do head lower, obviously this is predicated upon the dollar going up, right? That way the euro is weaker and the pound is stronger, obviously. And there's sort of a lot of pin action that needs to take place from other currencies movements in order for this to play out. So it's a little tougher to predict stuff like this. But ultimately, I would think that this whole 83 area, we're going to go visit. Yes, thank you. You are very welcome. What else do I want to talk about? All right, so GBP, CHF, right here. Little Swiss action. It's been strong. For a lot of currencies, but anything related to the pound, it's been weak on. US CAD, again, still looking for this area, probably down here. This whole 23 and this whole spot 231 area. I think ultimately that would be it, at least for a pause. Surprising thing about this is that dollar still continues to get weaker in this relation, and it's a polar opposite of some strength that we're seeing, at least short term in other areas. All right, so let me look at the daily on this. Holding for now. Aussie US dollar. Good place for Martingale system to be trading this right now. I don't know the win rates. I don't pay as much attention to that. So let's take a look at that, because I don't really want to GBP NZD, which you'll actually see on the next tab I'm going to show you, which is just a Google spreadsheets here. This has one of the highest win rates. Let's see if I can make this larger. I'm not a big fan of Google Sheets, I'll tell you. So there's all kinds of stuff you guys can glean from this. Let me just drop this. If you guys don't have this, it's on Dasan's channel, but you can always just click this link here. This is really a risk analysis, so I think it's probably important for me to show this to you guys because we can have some fun with the numbers, but it's in the chat room if you guys want the link to it. So it's basically showing win-loss ratios, right? Return to drawdown, stagnation, max drawdown. One thing to understand is the reason I don't trade stuff like GBP NZD is look at that max drawdown, right? So it's risky, you know. Yes, the win rate's high. See that? And for those of you that are not sure what we're looking at, this is the variable back-tested symbols. You know, he tested these, but I don't see where it shows. Hey, let me ask this question to you guys. Forget it. I got the answer. I didn't see that right here. So these are the results tested from January. It's basically 5 years. Okay. Dasan usually uses very good data. So this is pretty solid. I would probably print this out, you guys, and have this hanging somewhere in front of your trading systems or your educational material. And you can go through all this pairs to avoid, right? Because this max drawdown. Look at this one, GBP JPY. It's pretty volatile. US CAD. Who knew that would be in there? And he details his data. It's actually pretty good stuff. I'll take a closer look at this. Haven't had the time. We're actually taking off today to go skiing for a few days. It's a spring break for our kids in the school systems out here in SoCal. So we're going up to our mountain house. Well, I'm actually be broadcasting from there on Tuesday. Big Bear Lake. Here we come. So yeah, I'll tell you what, let me take a closer look at this data and I can get back to you guys on what, you know, one thing I try not to do, and that's why I don't really get into a lot of detail on this stuff, is, you know, I'm trying not to be the developers, right? These guys know their systems a lot better than I do. And many of them, they know this data a lot better than I do. And all those quant strategy systems that many of them do back testing in, especially Dasan. So I always just let the data speak for itself. But, you know, he points out some of the pairs to avoid. And, you know, this is an important thing in risk management. So make sure your team gets at least a quick glance or a chat on this next time you guys have your team meetings or you present it. Yeah, you're welcome. All right, so got that. What else is I going to address? Some tweets last week that I retweeted I thought was interesting. So I've talked a lot about Wyra Harris. This guy used to trade a lot in the CME. He's actually a super smart guy. I'm going to just post this in here if you guys want to continue to get. Wyra has just an innate sense to be able to sniff out all kinds of stuff going on with monetary. So I'll just leave it at that. But the PAX group, these guys are futures traders. PAX is a friend of mine, and Wyra is actually one of his good friends. So I'll just leave it at that. Links in the chat room for that. That'd probably be good to take a look at as well. Yeah, so John Arnold, if you guys don't know who John is a billionaire. He's really good guy. He founded, he was one of the guys that figured out Enron was a fraud. And he went out and shorted Enron. If you guys don't know what happened there, it was just an absolute monster score for John Arnold. This guy was probably one of the smartest energy analysts out there at the time. He retired. And he's another one of the billionaires that I follow. He's very, very humble guy. Could give a rat's ass about, you know, filling his garage full of Lamborghinis. He actually does a lot of good with all of his Arnold Ventures and so forth. But he really has been talking a lot about what's going on. Let me just back up here so I can show you guys the tweet. So this is the tweet he posted. He said there's so much money sloshing around the system. We've had to invent new asset classes, crypto, SPACs, art, these crazy music NFTs, all kinds of stuff just to absorb it all. Right. So just keep in mind that it's important to understand that, there was a lot of stuff created in the previous wreck of equities in a lot of the dot-coms that blew up into 2000, 2003 during the tech wreck. Many of those companies and so forth aren't around anymore. So you just understand a lot of this stuff's going to go away once the system drops. So I know this sounds bearish on crypto, and there's a lot of people out there that would have an opposite. But I think crypto, the bigger coins will probably survive, but you're going to probably have a measure of evaporation in a lot of stuff like a Dodge coin or so forth. So just know that. What else was there that it's important to note this week? What else did I retweet? Another guy I follow, Mark Minervi. He actually has a lot of really good stuff. He's more equities. I'm not going to get into this. All right, so David Hunter, again, way smarter than me. He's talking about T-bonds in a process of successful retest. Could see a 15-point rally in TLT. So let's show that because I wanted to just have a quick chat on what's going on in bonds. It is relevant to currencies, believe it or not. I'm going to look more on the weekly chart, and this is the 20-year he's talking about. This is the chart over the last 2.5 years. Bonds, pandemic movement right here, right? And a lot can be TED because usually credit markets get a whiff of something crazy way before equity markets do. And it's just been a complete boom of pricing if one has been long this ETF. This is the iShares. If you guys don't know who these guys are, it's Bank of New York. And then you have the IEF 7 to 10 year. Same thing. So keep an eye on this as well for currency purposes. And I will, if anything else steps out, I'm going to do that. I am going to end it there unless you guys have any questions on anything. Spread the word. Back-tested symbols. If you guys know of folks inside your up and down line that are trading variable, software is going to continue to get more fabulous. I'm looking forward to it once a couple more adjustments have been made, but all the other software out there, great stuff. Get those access passes built up. Everybody should have 4 of them at some point. If you brought a whole bunch of people in, many of those would be free for you. So just keep that in mind as you go forward. But happy birthday, Auvoria Prime, folks. Have a safe weekend.